we're taking a look at the currency market now with Shireen Darmalingham, Macroeconomic Strategist over at Standard Bank. Thanks, Shireen, for joining us today. So even with the extreme volatility we saw yesterday, the Rand not breaking out of that $7.95, $8.18 range, and that's what it's been confined to since December the 1st. Is it simply a case of more of the same until tomorrow comes and goes?
Yes, indeed, Alishia, it is more of the same. Yesterday we saw Rand participants, or rather today we're going to see Rand participants really, it could be a very volatile trading day for them, especially given the fact that we have so much data coming out and central bank meetings as well. We also have the current account number, which is coming out later this morning, and with our expectation of a wider current account number, it could really undermine the Rand from a fundamental valuation standpoint. But we do believe that the ECB meeting later today is really going to overshadow a lot of the data, especially the mining and manufacturing data locally. But we have been wedded to international sentiment, as you mentioned, and we could possibly see the Rand trade within that same trading range of about 8 Rand to about 8.20 for the remainder of this week.
So with that being the case, let's hone in on that ECB meeting, because of course we've been talking about it all week, and expectations are that we're going to see a 0.25 or 25 basis point cut coming through there. What do you make of that? Are you in line with consensus?
Yes, Standard Bank is in line with consensus. We do believe that they could cut by 25 basis points, with further easing coming through in the first half of 2012, and we could actually see the refinance rate coming at about 0.5% in the first half of next year. But there's also expectations that the bank could provide avenues for additional liquidity, and that's really going to be positive for the euro. So we could obviously see the Rand strengthen, because the Rand has been tracking the euro-dollar movements over the past couple of weeks. But what is also important is the fact that the EU summit is what's coming up tomorrow, and all eyes are really going to be on that after the expectations really come through by the end of today.
Of course, data earlier in yesterday's session showed that we saw hardly any Reserve Bank intervention in the foreign exchange market in November to prop up what has been a weaker Rand. Shireen, do you foresee them needing to step in if things go all right tomorrow?
If things do go right tomorrow, then we could possibly see the Rand a little bit more stable, even though we are seeing the weakness come through over the past couple of days. We do expect the Rand to be fairly strong towards the remainder of this year, with the seasonal strengthening coming through. But if things don't pan out according to planning in the Eurozone, we could obviously see weakness come through, and that could temper our local currency as well. I don't believe, however, that the SARB will intervene in the market at this point. I think we'll really have to see a run in the currency going to possibly 11, 12 Rand before they actually step into the market to intervene and to stimulate the currency. So at this point, we don't expect any kind of movements from the SARB.
Well, certainly the Reserve Bank has reiterated time and time again that since the Rand is a globally traded currency, limiting its volatility was pretty much out of its hands. Let's throw forward to some of those data points on home ground that you touched on a little earlier. Manufacturing data expected to come in at 5.8% from 7.7%. What do you make of that? Because, you know, production growth is still slow, but it's still in excess, many saying, of 5%, and that shows some resilience at least.
Yes, it does show some resilience, but if you recall the quarterly data coming through from StatSA recently with regard to the GDP numbers show that the manufacturing sector is still struggling, and the PMI indicator that we saw at the beginning of the month also showing some kind of struggle. Yes, we did see the number come in above 50, but the components of the PMI has indicated that there's still some softness and weakness in that sector, so we don't expect the manufacturing sector to really pull through and really stimulate the economy. In terms of the mining data, we're seeing, we're seeing similar movements there. We don't expect the mining sector to also really shoot the lights out. We do expect softer numbers coming through for the remainder of this quarter.
The Reserve Bank's quarterly bulletin, as you said, also in focus, is expected to show that household consumption in the third quarter was robust despite the high unemployment rate we've seen. Also that fixed investment is gathering pace, but slowly. You touched on the fact that we're expecting that widening of the current account deficit as well. That's of course something that we're going to be monitoring pretty closely in light of the kind of capital flows we're seeing. Many for now, though, seeing very little impact by that number today.
Well, we do expect the current account deficit to widen slightly to about 3.7% in the third quarter from 3.3%. What is a bit worrying is the fact that we could possibly see portfolio flows or rather outflows from South Africa. At this point, we haven't really been too concerned about the fact that we haven't been able to fund the deficit on the current account, and if conditions globally deteriorate, we could obviously see the risk of sentiment continue, and we could see portfolio flows exit South Africa, and that would be of a big concern. At this point, however, we have been able to really manage that very comfortably, but going forward it will be a bit of a concern. We do expect the deficit for the year as a whole to widen to about 3.5% this year from 2.8% last year, and for conditions to deteriorate quite a bit by 2012.
Well,
so we're expecting a deficit of about 4%.